So in your eyes, is silver a monetary or an industrial metal? Well, today we explore the potential for central banks to begin buying up silver to add to their gold monetary reserves. The trends are fascinating to uncover here, so let's dive on in. Now, this channel provides global macro insights for informed investing, so do consider subscribing. So, is silver a monetary or an industrial metal? Well, if we consider the different characteristics of money, it should be divisible, portable, homogeneous, that is identical, it should be durable and act as a long-term store of value. Thus, gold and silver do have the ability to represent these same monetary characteristics. However, silver, of course, has far wider and varied uses in industry. To really understand whether central banks are likely to use silver as a key reserve, we need to take a look at the historical and more recent trends taking place with regard to silver. So let's begin by exploring the historical perspective here on silver. Well, silver has long been considered a monetary metal and consequently always attracted a real premium to its price. Indeed, the gold-silver ratio was commonly around the 16-to-1 mark, although it went as high as 7-to-1 or so at times in China. Previously, silver was used as a means of engaging in day-to-day transactions, and so most commerce was actually undertaken by silver. Gold was just too valuable in contrast. Yet the use of dual metals within the economy had its problems. This bimetallic standard actually encouraged people to exchange their silver for gold, which was subsequently hoarded while silver was far more plentiful. But silver's position as a monetary metal effectively ended in the 1870s with the demonetization of silver, which ushered in the use of paper banknotes linked to gold. Consequently, silver then began to be seen as less of a pure monetary metal, and the upshot was that the gold-silver ratio hit 100-to-1 in the 1930s. Moreover, Bretton Woods appeared to be the final nail in the coffin for silver's use as money when the nations agreed to structure the global monetary system around gold and the US dollar, to the exclusion of silver. Today we're basically in a post-Bretton Woods era, with the monetary landscape having been decimated by the effects of massive credit expansion following the breakdown of the Bretton Woods Agreement. Yet in 1968 the IMF introduced special drawing rights, and the dollar for the first time was no longer freely convertible into gold. The gold-silver ratio once again hit 16-to-1 as forward-thinking investors realized what was likely to follow. Once again, it seemed silver was being viewed as a monetary rather than an industrial metal. Moreover, we saw the gold-silver ratio hit 16-to-1 in 1980. Yet since then, it clearly seems as if silver has been regarded as an industrial rather than a monetary metal. And to that extent, industrial demand is far, far greater than investment demand overall. Indeed, metals expert Jim Willey has been partly attributing China's enormous Belt and Road Initiative, the BRI, to the country's vast demand for silver within their manufacturing industry. He believes that the silver that they had accumulated over the last 20 years has been exhausted. Consequently, the BRI is a land grab of enormous significance in helping to boost their supply of silver, gold and other industrial metals. And just as with their domestic gold production, China will not be exporting domestically produced silver. Moreover, Jim believes that JP Morgan are working on China's behalf to ensure access to their supply of silver. With the prospects of a prolonged trade or even Cold War, silver once again appears to be a strategically important asset. But numerous central banks have held silver reserves, and so what has taken place with regard to those same silver reserves in recent times? Well, as we discussed briefly in this video, governments sold around 67 million ounces of silver a year between 2000 and 2004, while in the following 2 years they sold around 77 million ounces of silver. Yet government sale of silver fell to an average of 29 million ounces per year between 2007 and 2011. Since then, governments have sold 12 million ounces in total, and effectively nothing over the course of the last 5 years. Now remember, we've previously seen how central banks switched from being net sellers of gold to becoming net buyers of gold. Will we see the full reversal back towards silver? Well, the trend we see here certainly seems of great interest. Here we can see silver reserves by country in tons. Now this clearly indicates great mining countries with substantial silver reserves that have a history of using silver as a monetary metal seem likely to increase their reserve positions in silver should we see the same sort of price action that we saw with gold back in 2008. After all, that's when all the central banks started re-entering the gold buying market. This is becoming increasingly important as central banks' balance sheets expand and currencies are further debased the higher these balance sheets go. Moreover, the Fed's balance sheet asset quality continues to deteriorate versus the high quality assets that they previously always held. From 1923, the composition of the Fed's balance sheet was heavily weighted in favor of gold, as we can see in this chart. Currently, with the Fed buying up junk bond ETFs and other risky mortgage-backed securities, there is a need to actually greatly improve the credibility of our central banks. While central banks hate gold, they love it when they need to give their currencies credibility. Over the last decade, the re-emergence of private gold and silver investing, together with the rise of Bitcoin and other cryptocurrencies, continues to educate people on the substantial fragilities within our fiat currency systems. Moreover, this realization was keenly appreciated by emerging market central banks, particularly China and Russia, following the 2008 financial crisis, as we've discussed previously here. As we can see in this chart, that in the years since, central banks have been big buyers of gold. And to answer the question I posed at the start of the video as to whether silver is a monetary or an industrial metal, well, I think it all comes down to the eye of the beholder. Elon Musk may view it as a commodity and pure out and out industrial metal, but when you hold a silver coin or bar, most people see it clearly as a monetary metal. And since silver has all of the monetary properties of gold and can help to restore confidence in a crisis, there is a high chance that we may actually start to see central banks as net buyers of silver in coming years. What's more is that silver's recent dramatic price moves underline the falling confidence in fiat currencies. The likelihood of central banks becoming net buyers will grow the higher that silver goes. So here's our key summary of what we've considered today. Thanks so much for watching. Do check out the videos we've got here on the screen right now, and I look forward to seeing you next time. Bye bye.